This episode of The Yarn, we've got Denita Wawn, who's the CEO of the Master Builders Association. Denita, how are you?
Pretty well, thanks, Andrew. Great to be here.
Excellent. Now, tell me about the Master Builders Association and what are you doing in our economy? How do you propose to try and help us solve our massive housing crisis?
Yeah, thanks. Master Builders Australia represents civil, commercial, and residential builders. So we've got about 33,000 members around the country. And the focus here at the national office is very much on policy initiatives on looking at how we resolve the housing crisis and the myriad of solutions that we believe are necessary to ensure that we resolve the supply constraints and also improve demand. And certainly from our members' perspective, whether they are small one-home residential builders, whether they're building townhouses or whether they're building large high-rise apartments, the issues are pretty consistent and they have been for quite some time. So we're keen to work with governments at all levels as well as other stakeholders to see if we can in fact resolve the housing crisis that is currently before us.
So your members are big builders, small builders, is that right?
Yeah, we represent the whole entire industry in terms of building and construction. I think we've got to remember that 99% of the 450 odd thousand businesses in our sector are small to medium-sized businesses. So we only have a handful of large companies. The rest are very much small to medium-sized businesses that are working then with usually about 40 odd subcontractors to build the homes and the units and apartments that we need.
So what's the breakdown now in terms of your membership and what they're doing? Are they between the construction of apartment buildings and the construction of sort of freestanding individual houses?
Yeah, so we have a split where we cover the large commercial builders that are building the big high-rise apartments. Then there's a large number of those, increasingly larger number of those building sort of townhouses and 6 to 8 story level apartments. And then we go right down to the big volume builders of our new suburbs in particular, and then our mum and dads, whether they're doing small builds on the fringes right through to those working in older suburbs with knockdown rebuilds or to some extent also significant renovations. So it's a really good mix of the types of builders that are building our homes across the country, both city and regional.
So, and what's the most common model these days? Are there builders that are providing house and land packages themselves? Are they vertically integrated in that sense, or are they purely just turning up to build a house on a piece of land which has been subdivided by someone else?
It's a real mix. You see the volume builders right through to small mum and dad operators still doing that house and land package. You'll see builders certainly doing spec homes where they will do buy the land, build the house and then sell it on. So there's a range of models, and certainly there's that vertical integration of building and developing. And given the significant costs to builders at the moment, many of them are seeing that when they are the developer and the builder, that they can at least create some level of decent margin, where at the moment building, particularly with older contracts in the pre-COVID contracts, is seeing that they're building at a loss. But we still get a large number of builders that are building for developers and undertaking contracts in that form. So it's a good mix, Andrew, of people doing it depending on where they can make the money stack up. And the biggest problem we're facing at the moment as a building industry and as developers is making the money stack up of how much it's going to cost you to build and what you can actually get for it. And certainly the industry as well as clients are saying it's hard at the moment to get it to stack up in terms of making it a credible, viable, proposition to build a new home or do some renovations.
So if I wanted to become a builder, is it quite a high bar to entry or quite a high barrier to entry?
It depends. And in our great federated country, it totally depends on which state you're in.
Mm,
We have a really different type of licensing arrangements in each individual state and territory. It
right.
is very complicated, very confusing. You certainly need to be a licensed builder. That's a start. But the licensing arrangements between each of the jurisdictions differ. How much equity you have in your business is also a factor of how much you can build. But then there are also a variety of different requirements as well in terms of licensing,
Mm.
and that's what makes it difficult and frustrating. That we've been advocating for a long time of simplicity of licensing arrangements, and so people can move from one state to another. But unfortunately, that hasn't happened.
So it sounds like it's not like setting up a bank where you've got to put aside a couple of $1 billion. Sounds like the barrier to entry is reasonable. You've got to get a license and do a few other things like that. But am I right in saying that one of the biggest issues right now in your sector is that there are so many construction businesses going out of business?
There's a huge number, unfortunately, that are going out of business. But interestingly enough, when we look at the stats the other day from businesses in terms of the number of businesses in
Yeah.
this sector, we've actually got more than we've ever had before. So we have more established than we lose. But one of the key factors impacting building businesses at the moment is that in many respects, they are great technical builders, but they're finding that with the compliance burdens as well as the really, really tight margins at the moment, it's really hard to get the ongoing sustainability of a business. And so that's where we're providing additional support through master builders associations around the country about best business practices, ensuring that you're not only good technically, but also that you've got good business practices to ensure you've got the equity behind you, and that you
Yeah.
are costing and tendering effectively, so you're not finding that you're at a loss during the middle of a build.
Okay. So the the driver of the ASIC figures, I think it is, that show that there's a large number of insolvencies in the construction sector. Are you saying that's because people are saying, look, it's all too hard, the margins are too low, the cost of capital effectively is too high, and so we're just not going to do construction, we'll do something else?
Yeah, that's pretty right. Certainly, there is a small percentage that are phoenixing, and we're working with ASIC at the moment to minimise those impacts that have a detrimental impact for clients, but also paints the industry in a poor light. But a
Yeah.
large component of those who are being insolvent is simply saying, "This is too hard. I cannot cope any further. I'm going to close down my business." And certainly, we hear those stories day in, day out.
Okay, so what is the best way for Australia to get a more sustainable construction sector that can meet the supply targets that we all know are so important?
Well, there's a whole range of factors in terms of being a sustainable business. One is that there was a recommendation from 2019 called the Building Confidence Report, and
Mm,
it provided a range of recommendations from not only the way we build, but also the structure, the framework of the industry. And we
mm,
continue to push state and territory governments to implement those recommendations. So that's all about how we operate as businesses,
mhm.
and the licensing arrangements and the regulations and so forth. And not only putting the risk all on the builder, but that throughout the entire building supply chain. But the big issue really impacting our capacity to
Yeah.
deliver on homes at the moment is about labour shortages, skill shortages. It's about constraints in terms of changes to industrial relations. It's around planning and zoning, and it's also about the economy not being resilient at the moment. So we're finding that with all of those components, our costs are escalating by 30 to 40%. and people can't afford that because of the cost of living crisis, interest rates remaining stubbornly high, and inflation also remaining stubbornly high. So we've not got an environment that's conducive to either spending money
Mm.
or making money at the moment.
Okay, so let's go to that issue of migration. So, what exactly has happened where it seems like we could have been bringing in more builders and construction workers, but we've ended up bringing a whole lot of very outstanding, of course, yoga teachers. What's happened there?
Yeah, we've had this perverse, bizarre outcome where we simply, in the current system, are not bringing in enough skilled tradespeople. And there was an announcement by Jobs and Skills Australia about 4 or 5 months ago to say we had to, as an industry, establish that there were shortages in a lot of trades.
Right.
But the yoga guys didn't have to. And we thought that was just totally contrary to all the evidence that government has. So our push at the moment is that if we are going to build 1.2 million homes under the Housing Accord, then we need more skilled people. It's as simple as that. And migration is the short-term solution. But we have a system that makes it incredibly hard for tradespeople to come in. We have a system where it's incredibly expensive and time consuming to get your trade credentials recognised and also fill in any trade gaps that you may have. And we're competing in an environment where New Zealand, in UK and Canada all have specialist trades visas. We don't. And so we're pushing quite hard to see if we can compete with our competitors into encouraging more people into the country with the requisite skills that we need. And we just don't make it easy, unfortunately.
Okay, so if we wanted to bring in bricklayers, for example, how would you go about trying to do that?
Well, at the moment, you have to go through, temporary worker visas and sponsored visas. You've got to prove that you've got the adequate skills. At the moment, bricklayers are on the maybe list as opposed to the definite list,
Right.
and so it is quite hard. So, other than pushing for visas, we've also got to look at how can we get bricklayers who might be in the country under different visas, for example. So we have a huge number of people on working holiday maker visas, on partner visas.
Yeah.
Can we convert them over? So the system, Andrew, is really complex. It's really hard. And for
Mm.
us, the system has to change if we're really going to get enough people into this country at the moment that meet those skills needs. There's ways and means of doing it, and certainly we're pushing very hard to ensure that changes are done because at the moment it's in the too hard basket.
Okay, so if I went through your top list of things you wanted to help on the supply side, you would say that you would have uh, labour shortages, so you want to bring in skilled labour. Then you have the regulatory issues around industrial relations. What are the what are the IR issues which are germane to building and construction?
Gee, IR, where do we start? I think the
What are the main
big
ones?
issue,
Hmm.
the main ones are certainly the issues around constraints on how we manage our businesses with the CFMEU and patent agreements. Now, we acknowledge that the CFMEU has just been put into administration. We're hoping things will change in that regard. But we know when you look at those patent agreements and the restrictive management practices that
Yeah.
they entail, this is not just about pay rates, it's also about saying to management, you cannot choose which subcontractor you're going to use. And we know that that puts a huge cost burden on the amount of money it costs to build an apartment, for example. But if we also look at the Closing the Loopholes bill that was passed, they put constraints on the use of independent contractors. Now, we know of the 450 odd thousand businesses in our sector, 250 of those, 50,000 of those, are independent contractors who just want to be their own boss. And they've made it harder to do that. So, again, we've heard people saying, this is all too hard. I've got all these new regulations on me as my own sole trader. I'm going to
Yeah.
close up shop. So, there are some of the things that we've got to actually unravel before we even start on some of the more proactive changes that we'll need to make our IR system a little bit easier. And this is not underpaying people or anything like that. It is simply saying that you add cost to construction if you have restrictive practices in our IR system in Australia.
So how does the patent agreement work? Because there's been a lot of debate about the risks of the multi-employer bargaining laws that were passed in this parliament. So how does it actually work now?
Yeah, the multi-employer agreements are effectively just legitimising making lawful patent agreements that have occurred in our sector with the CFMEU and other building unions for decades. Basically, what happens is that the union creates an agreement and that they want. They certainly don't negotiate. They say to building and construction business, this is the agreement, take it or leave it. And then there are allegations, and these are currently being investigated, of coercion about things such as, well, you won't get jobs if you don't sign the EBA. So that is what has occurred in the past. There are a myriad of cases that show that that has been an attribute of our
Right.
industry, which means that you get large cost implications as a result of those patent agreements. And we now have a situation with the CFMEU in administration, and you've got regulators going, well, maybe these agreements are not genuinely agreed. And many of our members are saying, no, we didn't genuinely agree to them, that we were coerced, and we are encouraging them to come forward to the regulators to review the problems resulting from that coercion. But these patent agreements, they add costs in, because this is not just about the paying conditions for employees. It's about constraints on how you manage your business.
So how many of your members are in patent bargaining arrangements now, would you say?
It's hard to say. I think it would be probably around 10 to 15%. All the
Wow.
EBAs all the EBAs are currently under renegotiation. But Queensland has pretty much finished their EBA rounds a number of months ago, but now we're seeing New South Wales and Victoria start the process. So there is a lot of people in different positions at the moment on the EBAs, and a concern that these new round of EBAs have conditions in them that are particularly onerous and costly, that are new provisions that were not contained in the previous round of patent agreements. And so that's what we're concerned about, that if going forward these agreements are actually implemented in practice, the costs that we're trying to decrease will
Yeah.
actually be increased, unfortunately.
So what I don't understand is, why do your members, construction companies, have to be in agreements with the CFMEU? How does the CFMEU insert itself into all these arrangements?
It's the nature of the industry, unfortunately, Andrew. It's a situation where you are contracted to build a building. You're contracted to do it in a specified period of time that is no doubt very tight timeframes. And when you're dealing with weather and so forth, there is a high risk that you can go into timeframes that are beyond what has been agreed to, which means you get very, very high liquidated damages, even one day over. So what happens is that the union, certainly it's alleged that the union will make threats that if you don't sign the EBA,
Right.
as in its current form, they will cause industrial disputation. They will stop work on all sorts of things, which means there is a higher risk that you're going to go into liquidated damages periods. And the commercial risk is much greater by paying liquidated damages than it is by accepting the EBA. So the commercial decision is, we'll accept the EBA as it is. We don't like it, but it's cheaper for us than being hit with significant liquidated damages under our contract with the developer, or the government, as the case may be. So governments and developers, if they gave the builder greater leeway in terms of their timeframes on contracts, then there would be less risk of the unions being able to utilise coercion in signing an EBA, and also we need regulators to hold unions to account when
Yeah.
they are undertaking unlawful activity on sites.
So, how have some of the larger builders of apartment buildings, for example, avoided having the CFMEU on their sites?
Well, a lot of them do have the CFMEU on sites, including apartment building. A lot of them do have EBAs. There are some builders that have held out that haven't had the CFMEU on their sites. They've held firm. And we know that if you don't have the CFMEU, then you are likely to get a building quicker. I've heard of one story where literally two apartments, same levels, were being built together. One was CFMEU site, one wasn't.
Yeah.
The workers were paid the same amount of money. The non-CFMEU apartment was finished 4 months earlier than the CFMEU one. So they're the types of issues that we're going to address. But there are a lot of different reasons why the CFMEU has had the stranglehold on the large commercial sector and on the civil sector. And certainly that's what we're trying to address at the moment through the myriad of investigations that are occurring at the moment with the union.
Okay, so you think that stronger regulators like the ABCC, those sort of things are essential if you're going to restrain a organisation like the CFMEU?
Yeah, we think that the nature of the industry means that despite the administration of the CFMEU, you need far stronger laws. And the ABCC was good when it came to industrial relations laws. But in fact, we need a regulator that doesn't cover just industrial relations laws, but also criminal laws and also competition laws. One of the huge problems we have in this country in IR is that IR is exempt from competition law, which makes, the imposition and the interaction between IR and competition law really fraught. And we believe that some of those issues around cartel-like behaviour means that we need a regulator that covers criminal,
Yep.
competition, IR, and safety and laws to ensure that the nature of the industry is not being used
Yeah.
to the advantage by a small number of people.
Yeah. I mean, you're not unusual in the sense that you've identified that there are a number of laws in Australia which aren't properly enforced. I mean, I just conducted a 2-year investigation into ASIC, and it doesn't do a very good job on enforcing the law. But effectively, you think that more access to labour, skilled labour, IR, better law enforcement, those are all important things. What about on the demand side then for housing? What do you think could be done to help first home buyers?
Yeah, it's a really big issue. I mean, with first home buyers, it's a couple of things. First of all, is having enough supply in the first place that we're
Hmm.
not seeing astronomical prices of homes. The other big issue is banks in terms of credit ratings and so forth. I've heard of some terrible stories where if you've got a HEX debt, it can decrease your borrowing capacity by 20-25%, which seems unreasonable. So there's some issues around credit issues that need to be addressed. And finally, we also need to understand that if you don't own your own home by the
Yeah.
time you retire, then you're in a far worse financial position. So we certainly at Master Builders are strong supporters of home ownership. We understand that it's a significant asset for any person and that we should be ensuring that people have the capacity to get their deposit, that the borrowing conditions are not reasonable, and that we've got a supply scenario which means the housing is actually affordable for them.
Yeah. So you think that the lending laws and lending regulations could also be improved?
Absolutely. I think lending does need to be improved. We obviously need to be in a situation where we're not putting people's livelihoods in jeopardy by making it too flexible. But equally, you do hear stories where people are in situations where they just simply cannot borrow enough money despite their repayment capacity. And this is a really sad thing about in Australia, that if you look at some of the high astronomical rents that people are paying, if they had a deposit, they could very, very easily meet those repayments of a mortgage. They just can't get the deposit together, and that's the big issue at the moment. And the deposits needing to be 10-20%. So we've got to look at both the price of the property, but also the level of deposit that is required, which at the moment I don't think is flexible enough.
Well, that's one of the reasons we have a policy to allow people to use their own superannuation for a first home. So, do you have any thoughts on that?
Yeah, Master Builders is of the view that the coalition policy on using super for helping with the deposit is certainly supported. I think there's a good caveat in your policy that says that once you've sold that first home, that the capital is returned, which maintains the integrity of the superannuation system. So that is certainly something that Master Builders has supported and continues to do so.
So, just to wrap it all up, so other than the labour law changes, the uh, bringing in some skilled people, the issues to do with law enforcement, and then some demand side issues around lending and deposit issues around superannuation, for example. Is there anything you think that we could do as a country that would really drive supply, particularly from the Commonwealth level? Because I mean, so many people talk to me about their housing issues, and one of the things I often say is, "Well, we don't run the planning code in Canberra, for better or worse, but we do have other levers as a federal government." So, I mean, you do a lot of work looking at what the Commonwealth government does. Is there anything in particular you think that we might be able to do as a supply policy?
Mm. Absolutely. We at Master Builders have been advocating for a long period of time that the Commonwealth Government has finance levers it can use to encourage state government as well as local government to open up greater supply opportunities. Certainly, into whether it's the National Affordable and Homelessness Agreement, or in terms of just general payments to encourage greater opening of land and greater flexible planning and zoning requirements. I grew up in the days where, when I first started work, was the Hilner review,
Mm.
where a lot of changes were made to regulation because of the incentive provided by the Commonwealth in terms of grants if you made those regulatory changes. And I think a similar process should be followed by the Commonwealth, and that is something we've been advocating for some time. Use those financial levers a lot better, but also enforce once you do establish those
Hmm.
financial levers, enforce it as well. Too many times we see the Commonwealth establishing rules of finance and then they don't follow through. And I think that is really important in terms of putting the pressure on the states and territories to get their act together when it comes to planning and also providing greater supply of land to ensure that we can increase the supply of homes for all Australians.
Well, it's always good to encourage and incentivize people. That's always the preferred approach. So, Denita Wawn, thank you very much for joining us today. Denita Wawn from the Master Builders Association. Thank you for being with us today on the podcast.
Thank you. Great to be here.